We have everything you need to know today on AMC Stock. Now, AMC Stock was up a lot more in the beginning of trading today. Now the stock's only up about 2%, about 18 cents on the day, trading at $8.42 per share. And you're not going to believe the reason why AMC Stock was up 9%, 10% in the beginning of trading today. Ladies and gentlemen, we have a jam-packed video for you today going over everything you need to know with AMC Stock, as well as the broader market and the data that we got this morning, which is not great, especially PPI. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So let's talk AMC. Why was AMC up so much in the beginning of trading, especially in pre-market here, hitting a high of $9.31? You've kind of been falling ever since, but there's obviously over half the trading day still left, so anything can happen. You're like 30% through the trading day, so keep that in mind, that by the end of this today, this situation could be a lot different, right? AMC stock could be in deep red or potentially even rally back to 9% plus green. So the reason that AMC stock was really green is this. AMC stock jumps after company raised $325.5 million from selling shares. It says AMC stock jumped as much as 9% in early trading on Thursday after the theater chain announced it received approximately $325.5 million of new equity capital through the sale of 40 million shares. The company said Wednesday the completion of the equity offering, which initially led to volatile stock swings amid investor concerns over share dilution, significantly boost AMC's cash reserves, in addition to addressing current liquidity concerns as the company works to strengthen its balance sheet after the pandemic hammered its business. Quote, "The successful completion of this equity offering marks another significant milestone for AMC," President and CEO Adam Aron said in a statement. "Raising more than $325 million in gross proceeds has bolstered our ability to survive and then thrive. As we navigate the recovery phase of our industry, this infusion of capital provides us with flexibility to assist us in navigating the waters ahead and continue delivering the magic of movies to our guests," he continues. The news comes as AMC has enjoyed lofty box office sales following the blockbuster debut of Barbie and Oppenheimer this past summer, an encouraging sign of a theatrical bounce back. The opening weekend of the two films, which quickly became known as Barbenheimer, led to AMC's single best day performance since before the pandemic. In its most recent quarter, reported on August 8th, AMC beat Wall Street expectations on both the top and bottom lines after reporting revenue of $1.35 billion and adjusted earnings of $0 per share. It was the first time the company did not report an adjusted loss per share since the fourth quarter of 2019. Still, revenue lagged pre-pandemic results by about $150 million compared to Q2 2019. Attendance levels also dropped compared to the same period, down 30%. The ongoing Hollywood strikes will likely add to challenges after Warner Bros. Delayed its Dune sequel to March 2024 after originally scheduling the film for November 2023, but the chain does have one theoretical event to look forward to: Taylor Swift's Eras Tour movie. It says the pop star confirmed the film last month and will start showing in theaters on October 13th. AMC called it the theatrical event of the millennium, as other theater giants like IMAX and Cinemark are also expected to see a boost. So that is really why AMC went up today. It's the news that the capital raise is basically done. So that was great, right? Because, I mean, when things are not transparent, when you just don't know what the situation is as far as AMC raising capital, to get news that it's done, that they've already raised the shares, that it doesn't look like they're going to be raising shares anytime soon, it's one of those situations where it's not good what's been happening, but hopefully it doesn't get worse. And that's like that, one of my probably my most famous sayings: the markets can handle bad news. They can't handle uncertainty. So AMC has been plagued with uncertainty, even recently, with when is AMC going to sell the 40 million shares? Are they going to sell all of them? When are they going to be done? Now it looks like we have some answers to some of those questions. Now, take a look at this article that I stumbled across. It says AMC stock is a buy thanks to improved business fundamentals. It says AMC share price may have fallen due to dilution, but the theater chain's business is in the best shape it's been since 2019. And they also go on to say, by issuing up to 40 million new shares, AMC Entertainment was able to secure nearly 450 million in cash to strengthen its balance sheet. It says for the second quarter, AMC posted a significant increase in revenue, and the company is expected to return to pre-pandemic levels by 2025. An exclusive deal with Taylor Swift could generate as much as an additional $1 billion in revenue for AMC. Now, we're going to go ahead and skip down to kind of the end of this article and just read the last kind of paragraphs or so. It says Taylor Swift, the Eras tour is projected to gross $2.2 billion in North American ticket sales and generate $5 billion in consumer spending throughout the United States alone. Estimating how much of an impact this partnership could have on AMC Entertainment and the entire film industry is exciting. If AMC manages to gross at least something close to $1 billion from the partnership, it could be a game changer for the company's business model. Considering AMC's recent innovative initiatives involving everything from buying a gold and silver mine to marketing its popcorn and retail sales, deals like this could possibly become a regular thing and be a significant lever for the company's growth. And I think that's why people will be excited on the whole Taylor Swift film. It's not necessarily because it's just another movie going to theaters. It's to say, hey, maybe we can get more events like this into theaters. And maybe that can be an even greater kind of driver of revenue into the future. And that's something people are going to be excited about. And you might start to get more actual moves with AMC stock that are more in line with good or bad news, right? Over the past 9 months or so, we've gotten a lot of good news for AMC. There's been no shortage of really good news. But the stock has not reacted positively because we had this court proceeding just over our heads the whole time, right? So that's important to point out. And same thing with bad news, though. If we start getting bad news, that could also negatively affect the stock. But I think bad news gets more priced in, or at least it has been over the last 9 months or so. Now, take a listen to this. It says AMC equity offering is a safety net and a chance to reduce debt balances, says this analyst. By James Rogers, the equity offering boosts cash reserves, addresses liquidity concerns, and fortifies the company's balance sheet, according to AMC. The $325.5 million. Blah, blah, blah. It says B. Riley Securities estimates net proceeds of at least $310 to $315 million to AMC after commissions, fees, and expenses, and says the company could still issue a significant number of shares following those 40 million shares issued through the at-the-market offering. We estimate the company would still have approximately 365 million shares authorized but not outstanding to potentially issue through future equity programs, Wold wrote. And this is the guy that has the $45 price target on AMC stock. He says, quote, while the company had $4.69 billion of corporate debt outstanding at the end of the second quarter of 2023, only approximately $103 million of that debt is scheduled to mature in 2025, with no maturities scheduled in 2024, Wold wrote on Thursday. Nevertheless, we believe these proceeds not only provide an increased near-term liquidity safety net, while the lingering Hollywood strikes potentially put the 2024 film slate at risk, but also provide an opportunity for the company to reduce the principal balances for the higher interest rate debt scheduled for maturity in 2026 and beyond, especially those tranches that are trading at meaningful discounts to par in the open market. So this is pretty good what he's saying. B. Riley Securities maintain its neutral rating and a $45 price target for AMC stock. Quote, the only thing currently holding us back from being more positive is the higher valuation multiple relative to the other exhibitors and to pre-pandemic averages, Wold wrote. However, we continue to believe that this can actually play into AMC's benefit, as this equity capital being raised can also be used to seek out additional movie theaters to acquire and diversify with new growth strategies potentially outside the theatrical exhibition industry, all by using equity with an elevated valuation multiple that allows AMC to make these expansion moves in a much less expensive manner. He says they could just do something totally different than theaters. That would definitely be exciting. It says, of 8 analysts surveyed by FactSet, 4 heavy hold rating and 4 heavy sell rating for AMC. It says related, AMC remove overhang. Yeah, that's not related. So some pretty bullish commentary that we're hearing from Eric Wold, and that is with B. Riley Securities and the $45 price target, the most recent price target that we have actually gotten on AMC stock. So that's pretty encouraging to hear. Again, the average analyst price target is $21.68 per share with a return potential of 163%. Now, let's go ahead and run through some of the numbers here. So as you know, we just got the exchange reported short interest. If you guys have not heard kind of why it is 16.44%, basically AMC issuing the 40 million shares, it makes the amount of shares outstanding larger. So even though the amount of shares sold short is at the highest it's ever been by far, it's over 6 million shares higher than the previous high, which you're sitting at 23.21 million shares sold short currently. You're still just have a bigger outstanding amount of shares, so you have a smaller short interest of free float. Now, I don't look at this as a problem. Now, obviously, you want the short interest as high as possible, but I think what is more important, apples for apples, is the amount of shares that are currently sold short, because that's just more potential shares that need to be covered on, and that's not including the market maker revolving short positions that are on there. That does not include any potential short positions that are being kind of hidden by investors in the marketplace. So also consider that as well. That's unquantifiable, but consider it. You have cost to borrow fees of about 4.5%, cost to borrow average of 6.5%, cost to borrow max 8.6%, cost to borrow minimum 3.54%. I don't know if these numbers are correct. We'll have to wait and see, give it some time. If you look at the option activity, you're still not getting options data from Ortex, so I would take really all of this information with a big grain of salt. As you know, we still have a lot of FTDs that are coming due over the next couple of days, and even into the end of next week, you're going to be getting millions and millions of FTDs still, even though we are not currently on the threshold securities list. This has a very anti-dilutive effect on AMC stock, and that's good considering AMC just diluted us, so this anti-dilutive effect should help a little bit at least. Now, if you take a look at the option activity this week, this Friday is a quad witching day, so you have 4 different asset classes, or derivative classes I should say, that are expiring, so expect a lot of volatility. Now, if we actually look at what's going on here on the option chain, you have about 86,000 calls currently in the money, 112,000 puts that are in the money, so it's pretty close here. Pretty close, and I would expect a lot of volatility. Even the calls out the money at 196,000 and puts out the money at 272,000. It's pretty close as far as overall option numbers for this week, and I would expect that to play a role in creating kind of a volatile end of the week here. That obviously wouldn't surprise me, and don't be surprised if that does happen. Now, if we take a look at the data that came out today, we did get retail sales that came out at 0.6% month over month. Now, what's interesting is you actually seen revisions for last month's data. So last month's retail sales were at 0.7%, and now it got revised down to 0.5%. And odds are it's going to continue to get revised down. So even the number 0.6% that we're seeing could actually be a lot lower over the next couple of months. And if we take a look, let's take a look at these GDP estimates from the Atlanta Fed and see what they're estimating. Yeah, it's fallen quite a bit. Let's see. So the website hasn't updated yet, but the actual estimate is now at about 4.9%. Geez, whereas the average analyst estimate is now about 3%. Holy moly. That's actually insane. So be on the lookout for that. This could be a pretty bad event for the markets if expectations for GDP do start to come down heading into October 26th, which is the next GDP report that we are going to get. It looks like you almost have to see GDP expectations come down at this point because that's just crazy high expectations. Now, you also got your PPI month over month. This is definitely the worst data point that we got today. This came out at 0.7%. You were expecting around 0.4%. Now, when you have core CPI at 0.4% and you have PPI at 0.7%, that means there's actually a net negative to margins happening here. PPI is like the producer side of inflation. CPI is the consumer side of inflation. So you're definitely seeing a net negative to margins. At least that's what the data is telling us could be coming, guys. So none of these things are exactly great. AMC stock, pretty good news today. Something we can definitely take and be more encouraged about rather than not. And we'll see what happens by the end of the day. It looks like you're kind of bottoming out on the 1 minute chart. And if you just look at the daily candlestick chart, that's obviously pretty good as well, all things considered. It's kind of showing that we're probably in for a much larger bounce from here, especially the MACD, where the yellow line just crossed above the blue line. That is a very bullish sign, as well as the RSI is at 27.12. I mean, that's really good as well. That's exactly where you would want to be. Heading into a potential up move, right? Once you get the break of 30 on the RSI and you go from oversold to now more normalized in a normal range for RSI, that can be very bullish also. And not to mention the 20-day moving average at $14.89 per share. That is a level to be watching, as well as the 8-day moving average. I think that one a little bit more important here. Let's go ahead and pull it up. And yeah, it looks like you're right at about that 8-day moving average. The 8-day moving average is at $8.65 per share. So you really want to close above $8.65. That's going to be a key level by the close of trading today. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.